Hey everyone, me Kevin here. Tomorrow is a very big day. Not only is it Friday and it's the end of a short trading week, it is the first trading week of June. We'll get to see what happens with AMC. Is it going to end the week strong? Are we going to see the squeeze actually start getting squoze? But folks, it is Jobs Day, and that's what we have to talk about now, along with a little bit of talk about AMC. But first, I want to give a shout out to a fellow YouTuber who will be fighting Mayweather this weekend, Logan Paul. In fact, if you want to watch the Mayweather versus Logan Paul fight with myself and the folks in my campaign, in our campaign studio, aka the campaign garage, check out the link down below. Go to meetkevin.com/fight. meetkevin.com/fight. And if you donate a chunk to the campaign, we'll get to have a pizza party together this Sunday in Ventura, California. Check it out, a link down below. Let's now talk about jobs. Jobs data last month came out as a complete disaster. We were expecting 1 million jobs to be added. We only had 266,000 jobs added. It was the biggest disappointment we had seen in a very long time. It started leading inflation expectations to almost immediately tilt downwards, because the fear was that, wait a minute, if the economy overheats too quickly, if the economic engine starts ramping up too fast, and we get to maximum employment too quickly, that means rates are going to get bumped sooner. Because remember the Federal Reserve's dual mandate, price stability. Price stability is what the Federal Reserve achieved when they ruled the money printer, okay? When they went nuts back in March of last year and said, whoa, don't panic, keep the banks open, keep the credit flowing, keep everything going. We'll just backstop everything. We'll literally bail out everything. We'll even buy bonds of corporations, which recently the Federal Reserve has started to unload because they realize they're not needed anymore to provide this kind of price stability. That's one part of the dual mandate. But the second part of the dual mandate has to do with maximum employment. And maximum employment has recently been more defined as all races and sexes. This is important because you don't just want max employment for white males, but you also want max employment for women, blacks, Hispanics, Asians, everyone. For example, right now, while the average United States unemployment rate is around 6.1%, black unemployment is around 8.6%. It's much higher than white unemployment. So these are important things. But the point is, the Federal Reserve has a dual mandate: price stability and max employment. And tomorrow's number will be heavily scrutinized by the Federal Reserve, which anything that gets heavily scrutinized by the Federal Reserve is something that could guide their interest rate making decision, will be heavily scrutinized by markets. And this is where you've got to know what the expectations are, so that way as soon as that jobs data comes out, we will have the answer. Now, I will be live streaming the second this job data comes out. This means when it comes out at 5:30 in the morning California time tomorrow, I will be awake to provide you exactly what that jobs data was the second it comes out. And here's the current expectation. So we're gonna grab the iPad here and we're gonna write down the current expectation. So we are expecting, I guess I should start with last month, okay? The last month expectation was 1 million. We got 266. What happened on a big miss? Well, on a big miss, we had inflation expectations go down, and we actually didn't have a horrible cycle for tech and some of the consumer discretionary stocks. They kind of traded sideways, maybe slightly up. We had the big meme movement, and I don't like to say meme movement. I prefer to say momentum movement. That's just what the media uses. So the momentum movement, right? This has kind of been characteristic of the last month, and we've actually also seen some commodity prices go down. Some of that does have to do with China trying to do whatever they can to fight commodity prices from going through the roof, because they have been going through the roof for the past 6 months. It's been crazy. But we've also seen cryptocurrencies come down. Now, some of these things could have potentially just happened because of the weight of many shorts in the crypto market or a lot of short selling in other parts of the markets. So this is not all directly correlated to jobs with certainty. These are just things we saw happen over the last month. Inflation expectations, went down. We had tech and consumer discretionaries kind of trade sideways. Meme momentum stocks went up. We had commodities go down and crypto went down. Okay, so what are the expectations now? Well, right now we are expecting, let's see, I've got a note here that says we're expecting the current survey to come in at 650,000. So 650,000 is the expectation for jobs. So we're gonna write that down here, 650. And I would say if we get anything within about 100,000 of that, so 550 to 750, the market will probably respond in a relatively benign manner. We might see a little bit of movement here, a little bit of minute-to-minute movement in certain stocks, but I don't think we'll see any kind of longer run movement. However, if we dramatically miss again and we come in with something, I would say under 500,000, so if we came in with like a 499 or 450, which I don't think will happen, I personally think will probably be somewhere in like this range here, which might be like 625 to 550, something like that. We'll see. Hopefully we're booming in some regards, but if we're in let's make this very clear. If we come in super, super low, so we come in like 450 or below again, I would expect inflation expectations to go down. Now, some people wonder later, like, wait a minute, why would inflation expectations go down? Doesn't less people working lead input costs to go up? So inflation is very, very complicated, and even though that intuitively makes sense, it's just not what we're seeing in the market. We're seeing inflation expectations go down, and that's because we're not expecting the economy to overheat. Everything right now has to do with the economy overheating, not so much with supply chain pressures when it comes to jobs. Don't get me wrong, supply chain pressures are massive, but they're already starting to alleviate. NEO, XPeng, and other companies are already starting to mention where they're starting to see a relaxation in the amount of supply chain constraints. So that's going to be transitory. And I hate to use that word because I know the Fed uses it and we don't really believe the Fed all the time. But anyway, if we get a super low shocker, I would expect inflation expectations to go down. And honestly, it could be good or neutral for tech, consumer discretionaries, and we might see a little bit of the same. I wouldn't be surprised if we saw commodities go down even more. And it's possible that crypto could go down too, because the lower our inflation expectations, generally the less people are investing in crypto as a hedge against inflation, right? Just something to think about. Now, if we get a more moderate response, I think we might just kind of continue the same flattish trends that we've had. So if we get a response that's somewhere within this range over here, we'll probably get some more of a muted, moderate response. The bigger catalyst, and this is the one I think we really pay attention to, is what happens if all of a sudden we play catch up from last month and we get this massive beat. Now, this is possible. I'm going to say this is probably about 35% right here, and that we're probably 65% leaning towards the lower side. And that's because unemployment money is still flowing in most states right now, and most states are still getting into that reopening, ramping, right? So I could be wrong here. We could get pleasantly surprised tomorrow, which is really good for our GDP. It's good for our economy, but it's probably going to mean that inflation expectations are going to go up. It's very possible that because of that, we could finally see a little bit of a resurgence in crypto prices. It's also possible that maybe there'll be some pressures on commodities, though this is going to be less clearly linked, mostly because supply chains are starting to catch up on spreading out their commodity demand, and we're starting to see those supply chains repair a little bit. It is possible, if this number really, really, really comes in high, that you could see tech, consumer discretionary, some of the higher valued companies drop on that news, because that'll create that fear again of, oh no, we're overheating. Because in very simple terms here, you want to remember that overheating, so I'm going to put overheating, I guess I just wrote the whole thing out. Overheating is generally seen as bad. Strong is seen as good, and weak, or sort of underheating or cool, is also seen as bad, right? Because this right here, underheating, this is deflationary, and generally this is bad. Too strong over here, this is bad, because this is where you get into that sort of hyperinflationary direction. You don't really want to be here. You really want to be in this well, quite frankly, 2% inflation category, where you have strong growth, which strong growth usually rides on top of inflation. So you have this like 3 to 5% GDP growth per year riding on top of about 2% inflation. This is where we want to be. This is why you've got such a bizarro market to understand, because it's not binary. It's not left or right. And it's really, a lot of it is, well, to be determined by how people react and how markets react, and then how traders amplify that reaction. So it's a little bit of a mess all the way around. But look, I mean, tomorrow's going to be a big day. We're going to cover the GDP data. I'm sorry, we're going to cover the jobs data right away. We're going to cover what happens with AMC. Quick update on AMC, just so you have it as well. Oh, and remember that Floyd Mayweather and a Logan Paul fight. If you're interested in coming to hang out with us in person, we'll have a little pizza party. I know it's pricey, but check out that link down below. It's a donation to the campaign, so it's definitely going towards a good cause, but check that link out down below. Regarding AMC, I do want to just provide a quick update that I have about $62,000 worth of exposure. Obviously, AMC is down about 18% today, and it's down in the after hours another like 8%. So obviously, you know, in the short term, you don't feel too good when you got a dip like that, especially when you got some plays that are a little shorter term. My options will get me into a $52,000 hold position at $49 per share on AMC. And then I do have some $40 calls as well. These are very, very, very risky plays, and they will either do very well or not so well. And so we'll see what happens. The good news is I'm bullish. I'm bullish on the short term because we haven't even seen any kind of squeezing begin. So it's just going to be a matter of a waiting game. It's a big, 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 big waiting game. So we'll see what happens. Folks, thank you so very much for watching. If we can outlast the short sellers, that's a good thing.